Welcome to the $1 Billion Podcast, a weekly show about the entrepreneurial journey and making it big in any industry. We're your hosts, Joe White and Kane Daniel.
And today we have our guest is Deren Hasip. Deren has over 25 years experience in financial services, started out in the banking world and then progressed through various roles there until I think 2015 when he entered the broker side, starting his own brokerage, Mortgage Scout. And since then, his brokerage has been recognized as Brokerage of the Year in 2022 and was also a finalist last year in 2023. Deren's also a very passionate teacher and coach. He's taught at George Brown College and is currently a professor at REMIC. He also has served as a finance expert in media appearances on City TV. He's been quoted on 680 News, Mortgage Professionals Canada, Rep Magazine, and Now Magazine. So Deren, that is quite a resume. And welcome. Thanks for being here. If you can, maybe just tell us a little bit about yourself and sort of your origin story.
Sure. Thank you, Kane. So you covered it. Started off in banking in 1996. Started off actually with Canada Trust sort of back in the day, and ground level. While I was in school, I was a teller. Kind of worked my way up the ranks working retail, which gave me a really, really solid foundation. And from there, kind of figured out what I wanted to specialize in. After doing a stint in retail management, bridged into a role as a commercial, as a mortgage specialist, institutional mortgage specialist. And, had some great success as an originator. Someone talked me into, hey, I think you'd be great in management. So I did about a 10-year stint in management. In 2015, I had enough and said, okay, listen, if I'm going to do this, I'm going to do this for myself. I want to build something that lasts, and made the transition to becoming an independent mortgage professional. So very fortunate to surround myself with incredible people, and we've enjoyed some successes making that transition. To your point, we were Brokerage of the Year in 2022. Definitely a memorable accolade for me, and it wasn't a byproduct of being a big brokerage. It was a balance between, delivering quality to our end user consumer, our customers, supporting our people in achieving sort of excellence in what they do, and having a great credibility and rapport as far as our institutional lenders partners are concerned. So that's kind of the chronology. Outside of that, happily married, dad of 5 kids. They keep me busy.
5?
Wow. 5. Busy man.
Yeah, exactly. So spent a lot of time chasing them. Some of them are obviously...
So you're still really in a management position.
Absolutely. So I've got 1 done school, 2 in uni, 1 going to be joining his siblings in uni, and 1 heading off to high school next year. So
geez. No wonder you're working so hard.
That's right. Necessity is the mother of innovation. You want to get something done, need it. See how hard you work.
Awesome. Hey, I see behind you some nice looking hardware. Do you want to tell us about those? Especially the twirly one. That looks great.
The twirly one is actually the Mortgage Awards of Excellence. So that was a 2002. We were recognized Brokerage of the Year. Particularly significant year for us, as we as a brokerage had made a transition from one network to another, and still managed to deliver on some incredible results financially, despite the challenges kind of in the market. So great year for us. The one behind that was Agent of Change Award. That's awarded to an agent that takes initiative above and beyond sort of just the mechanics of business and financial results, but also sort of contributes back to the betterment of the industry. So it's awarded to an individual throughout the DLCG, the Dominion Lending Center's group of companies, for individuals that are aspiring to make a difference in the industry. So very happy to have been awarded that in 2022. And the little one actually is a management award that I got from Scotiabank for being District Manager of the Year, for achieving significant growth results year over year, not only in financial results, but recruiting excellence as well.
Fantastic. Yeah, it's a nice little threesome there.
Thanks.
Darren, something that you said earlier about I had enough. Can you explain what you mean by that, and maybe give a little more context?
Yeah, for sure. I mean, for anyone who's been in any kind of a, corporate structure, sometimes you feel like a cog, just a cog in the wheel of this whole big giant machine. And, I am incredibly thankful for the experience that I had coming up through the ranks as a retail banker and then, moving into middle management and executive management because it gave me the foundation I needed to succeed here. But the challenge in being part of such a big entity is that sometimes you get lost in all of it. And it's nice to be able to kind of deliver on the results and the expectations of you as an individual. But, doing a job isn't just about, getting it done and getting paid. When you're looking for a career, there should be more. And, I kind of finally got to a point personally that my goals, although I was achieving my financial goals, the fulfillment really wasn't there for me. There were some key pieces missing. And that's where I kind of decided, okay, I want to take this to another level and I want to do something for myself. And, you want to take the training wheels off and take it out there. So it's one thing to go ahead.
No, sorry to cut you off. So how have you found this role fulfilling? What has given you that fulfillment that you were lacking?
I was fortunate to have a coach, and we went through like an assessment as an individual to try to figure out what would give me true fulfillment. And just because you're good at a job doesn't necessarily mean it's going to be a fulfilling role for you. So you may be able to achieve your financial objectives, but it won't necessarily give you that sense of purpose. So, as I went through kind of spending some time with this coach of figuring that piece out for me, one of the big things that sort of was brought to my attention was, like, here are the things that we think you'd be great at. But just because you're going to be great at it or you can do the job doesn't mean you'll have that fulfillment. You have to do, based on our assessment of you, these are the things that need to exist in your business or in the roles that you do so that this isn't just a job but a career where you can walk away from this thing, look back at yourself and say, I did that. And that's not about a T4 or a notice of assessment or how much money you have in the bank. So I was fortunate to have someone to sit down and go through that kind of an assessment. Besides your doctor who physically tells you how you're doing in life, no one ever tells you how you're doing in your career. And that's an investment that a lot of people kind of fail to make in themselves. They're willing to spend money on car insurance, but not on assessing and getting to know themselves better. So I was fortunate to have that kind of direction. And at that point, some of the key findings that they were sort of pointing me in the direction they were pointing me towards were do things where you make money and where you know you're good at it, but look to also fill the gaps of fulfillment, people management, people development, team building, those kind of synergies are things that give you drive. You can't make mortgage payments with some of those things, but they make you feel better. But you need that balance, right? So that's kind of where I had enough factor was, all right, so I want to take what I've learned here and I want to put it into play and I want to build something that I can put my name on.
And coming from, that's such good advice, by the way. I love that, the coach aspect. When you came from, like for any of our listeners that are bankers, I know there's a lot of bankers that consider this and there's some swap. Is there anything that was surprising or different than you expected when you came into the brokerage side?
You know what? You really don't know till you get in, right? So, you have an opinion on kind of where things are and how you think things are going to be. When I made the transition, you obviously go through sort of the licensing components of figuring things out, but some of what you think is going to be there from a support and development standpoint isn't really there. So, aside from the entities like Remic that help you, fulfill your licensing requirements, there is a big void, a big gap in the industry in helping people truly achieve the success. Understanding the mechanics of a mortgage and how a mortgage works and a mortgage features and rules and regulations are the things that you know to be compliant to do a job. But, where are those pieces that give you that guidance in that direction and becoming a success? Fortunate for me, I could draw from experience because I had done this as an institutional guy. I had also coached people for 10 years through a couple of different institutions. So I had that I could draw from, but the challenge is, how do you get into this industry if you don't have that experience, right? And that's where it gets really difficult for people. So, for me, it was about building a support infrastructure for myself. And I was fortunate to have a colleague that we had worked together for about 20 years. We chose to go on this journey together. So we were essentially each other's sounding boards, keeping each other on track and on task, and then started to fill and identify the gaps and fill the gaps as we built a business.
That's cool. So do you think, in going to your point about the coaching and mentoring, do you think that's probably one of the most important things that a new agent should be looking for when joining a brokerage?
100%.
If they don't have that, if they don't have the experience that you came into this with?
Absolutely. Absolutely. Otherwise, you're walking into this thing blind, right? Mm-hmm. Having a license is one thing, but getting and being able to have success is about understanding, what it's going to take to get there. And I mean, there's no one way to build a business and being a successful mortgage broker. You see people kind of leveraging social media platforms and, working the lead strategy, ClickFunnels, things of that nature. And by the same token, you see other people that are drawing from communities and community sports, or using a linguistic ability to get to a specific, ethno-specific segment. And while others build businesses that are not necessarily more B2C, they're not advertising directly to consumer, they're building a business around referral sources. So working with referral professionals like real estate agents, financial planners, accountants, lawyers. There's so many different ways of building a business, but the problem is you don't know what you don't know. Right. And if you don't have a pathfinder, if you don't have a coach, if you don't have a mentor, then time and mistakes are going to be your teacher. And the problem with that is, every human being is limited by one thing, and that's time. So, if you get the benefit of a coach or a mentor, then you can shorten that gap as far as your ramp up period is concerned and have a higher probability of success in a shorter period of time. So mentorship, 100%, very important.
I really like that term, pathfinder. That's a great way of summarizing what a coach is going to help you do, find your own path. That's fascinating. So when you got into brokering, I know it requires a significant investment of time, and with 5 kids at varying ages, how did you find that work-life balance, or for a time was it not there?
I don't know if you ever heard the saying, you want to get something done, ask a busy person. Well, the funny thing about busy people, it's about priorities. And, as you get older and everyone gets older, some of the things you realize is every single human being is limited by the same 24 hours. The question isn't the limits. The question is what you do with what you're given. And time should be invested and not spent. So when you see it as an investment, you change the way you do things. And so for me, I had to figure out what that balance was, and I knew it was going to be front-end loaded. I knew that I had to take the time away to build foundational pieces in building my business and first making that transition. And, and here's the funny thing, there's that imposter syndrome that kicks into play, right? So for 10 years, I was in management, and, the longer you go into management and the more removed you are from the field, the more your credibility gets diminished because people question your strategies. People question your ideas on how you think business can be done. And all of a sudden you start being, labeled as, well, you were good and you did well, but you did well 10 years ago. The business is so different today. So, I was really looking forward to, all right, well, I'm going to put, what I preached into practice and let's see if this works. So, I left behind an executive salary that was pretty cushy. So, and most people don't want to take that risk because it's huge. And when you got 5 kids, you'll work real hard to make sure you get that back on track. So, for me, it was about focus, and it was about consistency of execution, and it was about persistence, because your key performance indicators as a brand new mortgage professional has nothing to do with how many deals you wrote last month or how much commission you're making next month. Because foundationally, when you're becoming an originator or mortgage agent or mortgage broker, your success is about the seeds that you're going to plant. And some of those seeds you plant could turn into an opportunity right away. Some of them could take a long time. Mm-hmm. Even though I had, decades of experience and I hit the ground running, I had been removed from sales in 10 years. The customers I had worked with were gone. They found new professionals. So I had to kind of rekindle some of these relationships. And even if it was somebody I knew back in the day, for the last 10 years, they've been working with someone else. I can just show up right now and go, hey, by the way, I'm back to business now. Let's rekindle this relationship. You know what they're remembering? Well, 10 years ago, you left to go into management and I had to go find someone else. So what do you bring to the table that's going to help me swing this business back over to you? Because this guy or gal has been taking care of me for the last 10 years. Like, you can't be naive about these things. You have to understand what your value proposition is. So I knew that in the first 6 to 12 months, it was very foundational work. My key performance indicators, or the things that I was measuring, wasn't how much money I made or how many deals I wrote. It was about who I was targeting, how much time and energy I was putting into them, how much opportunity presented for me as a mortgage professional, and what value I could add to them. And then fast tracking that to earn an opportunity for trial. Because trial basically meant that, and I mean, as a mortgage professional, especially if you're building a business working with referral sources, it's a combination of credibility, trust, and likability. That combination of factors will effectively move to trial. So if I can demonstrate my credibility through my track record, and if I can show social proof, whether it's Google reviews or third-party attestation that I'm good at what I do, and I'm somewhat likable, the probability of me being tried by this referral source is far more likely. So can I put a systematic approach to fast-track that dating period and get trial with that particular referral source? So these are the things that I kind of had to be really systemic about, very diligent and consistent and persistent to be able to win that business. Because you can't just show up and throw up and hope somebody sends you business. You got to take a look at the people you're working with, and you got to make sure that you're imbuing that level of confidence so that they're willing to give you a try. And if they are going to give you a try, you better knock it out of the park.
Deren, you just packed a ton of valuable information in there. Thank you for that.
Sound bites too. Show up and throw up. That's good.
but it happens. But it happens.
I'm wondering so just to unpack one piece of that, you mentioned earlier about finding success. There's different avenues, there's different ways to get there, different strategies. Is there anything that you think are different set of competencies or something about people that is common amongst those that you see that most successful mortgage agents will have in terms of competencies, or just the way that they are? Is it desire, or is there anything that you could identify that you'll look at a new agent and go, yeah, that person's probably going to find their way?
That's a great question. And it's not always financial. So I'll start with that. You need to understand their why, right? Simon Sinek is an incredible author, and he's got a great book, Start With Why. If you can put your finger on someone's why, that's going to tell you whether or not they're going to be successful. Because the problem is people are contented at different levels. I'll have people that work at my brokerage where they'll write $15 million in business and they'll make 6 figures in income and they're perfectly happy. And then I'll have people that are working for me but they make $300,000 a year and they're unhappy because they have different whys. It's not always about financial. So you have to understand the driving force behind the individual and their motivation to achieve what it is they hope to achieve. And you can't leave that discussion on money. Someone comes in and says, I want to make 6 figures. Listen, I don't care where you go. Walk into a bank, go office by office, ask everybody, do you want to make 6 figures? No one says no. No one says, I don't want to make 6 figures. But if you ask them what they're willing to sacrifice to make 6 figures, that conversation completely changes. Or if you ask them, more importantly, why you need to make 6 figures, again, that changes once again. So you really need to understand the why of that individual, why they want to come into this job. And, because there's a big difference between need and want. Everybody wants stuff. They're not willing to give up stuff to get it. Right? They're not willing to give up comfort to achieve a little bit more. Not too many people are willing to give up, good executive jobs to go start a brokerage and hopefully replace their income, right? Because that's not the way we were raised. And, but the world is changing. So it's really sort of important for these people as they come in that you need to be self-motivated. You need to understand your why. You need to understand that your success at the beginning is not going to be based on the total number of deals that you do or the commission. If you understand what steps you need to take at the beginning, and also understand that you may be succeeding, but if you're using the wrong yardstick to measure your success, you will quit before you succeed. And that's a really, very, very important thing. I remember hiring a lady who had been a 30-year banker to become a mortgage specialist. And this lady financially was super, super well established. She was in her mid-50s. She was a senior branch manager, very well decorated with an incredible list of achievements as a retail banker. Very, very well regarded by her peers. And the stigma was, if you left the bank as a decorated branch manager to become a mortgage specialist, you were committing career suicide because you could never come back again, right? Mm. And you have to choose to listen to your inner voice and not the random opinions of others, right? For her, it was about fulfillment and it was about validation. She sat down with me and said, listen, I don't need money. As a matter of fact, as a household, as a family, we do really well. I've got a good portfolio of investments. I drive a fantastic car. I've got money in the bank. I don't need to do this because I need money. However, I've helped a lot of people along the way, and they've forgotten what I've done for them, and they don't believe that I can do this job. So I need the validation that I can do this. And she was in her late 50s, 30 years of, she left it all behind us by what everybody else said. In her first year, she was Rookie of the Year, and she had done $28 million in business. And she had completely reinvented herself. So that age-old saying of you can't teach an old dog, new tricks. I'm sorry. It's not about who you are, where you're from. It's about that drive. It's about that passion. It's about her why. Her why was important that kept her on track, right? And that's something that you can't lose sort of sight of. So the key to selection in this process is understanding your why, of why it's important, and not measuring your milestones. Not saying I want to make six figures. That's not enough. You need to quantify why 6 figures will change your life. Because up until this stage in your life, however much money you've made, you're here today. So what are you missing today that you need more of, right? And for some people, it's not even money. Sometimes it's quality of life. I've seen people leave a retail role where they make $70,000, $80,000 a year, and it wasn't about making more money. It was about making the same money, but on their terms, right? So that's where the why really becomes super, super important to every individual. But, if I take a look at... Go ahead.
No, go ahead.
If I take a look at those people and the ones that were super, super successful, the ones that are most successful, but the fastest startup, are the ones that understand their why. They are not naive about the challenges that are ahead of them, and they know what they should be measuring, right? So if you come to me in 6 months and you tell me you've only funded 2 deals and this isn't going to be the job for you, well, you shouldn't have maybe made this transition, because nobody turns things around in a few months. I've also seen people take faith in short-term gains, which, once again, well, I know a bunch of guys and I write 5 or 6 deals, so I wrote 5 or 6 deals and I made money, and I've exhausted the immediate opportunities in my personal network, and I wasn't focusing on building business. I was focusing on writing business. And in the beginning, it's about building a business, not writing the immediate opportunities. Like picking a couple of low-hanging fruits is one thing. Building a sustainable business that's going to continue to bear fruit is a different story altogether. So, that mental fortitude, right, of understanding who you are, the fact that you will be tested, the fact that, despite being tested, you will stay on track and you're true to yourself, that's going to be what it's going to take for people to succeed. So it will be harder if you don't have a background in finance, but I've seen plenty of people that didn't have a background in finance absolutely kill it in this industry.
So do you think that when making a transition, what we see in from our perspective, we train or teach over 8,000 to 10,000 students a year who are coming into this industry. Not everybody that comes to us eventually gets into the industry. A lot of people are taking a look and saying and asking the question, is this for me? They take the course. Some decide it's not, and others decide that it is. So do you think before making the decision that, yes, it is, it would be helpful to sit down with somebody at a brokerage, as we were talking about earlier, like coaching, and find that person who can talk to them about what their why is, what their path is, and if this is a good transition for them.
I think that's great advice. What's equally important in that is when you're sitting that, don't just talk to one person. You got to talk to a few people, because you need to qualify the context of how people have built their business. Like, I've seen people be ridiculously successful, but their transition strategy and their background and experience is not exactly on par with yours. So if I'm looking to make a transition and I'm looking for a mentor or mentorship, I want to try to find somebody who shared a similar path as me, right? So if you're a banker, find a banker that's made a transition. If you're new to business, find somebody who was new to business who made the transition. Take a look at and ask them, what skill sets did you bring to the table? What were some of the most significant key contributing factors in what you did for a living in your old life that translated well in helping you succeed in this life? And the biggest thing and the most significant factor in succeeding as a mortgage professional is not your ability to do your TDS and your GDS, or, you're a fantastic mathlete. What it has to do with is making and being able to make your phone ring. If you can make your phone ring, you'll make money. If you can sit there and do math until the cows come home, but your phone's not ringing, no one's trying you, you're not going to get there, right? So I've seen incredible people that I would trust my finances with make the transition into this industry and fail because they put their faith in the wrong skills. That's something you can't lose sight of, to the point where I've gone back up to them and said, but I don't get it. Like, if I was looking for a financial advisor and I wanted to sit down with someone, knowing your background, I would have called you. How are you failing? And the problem was they had put a mistraced level of trust in their abilities versus, what was the true contributing factor to their success. Like, I've seen guys and gals that were fantastic financial advisors, consistently exceeding expectations, working at a retail environment, and they move into the broker space. And they know how to put a deal together. They know all the financial terminology. They've got an incredible background. The advice piece isn't missing, but they're sitting around navel gazing, hoping their phone rings and doing nothing proactively to make people come to them. Right? So it's really, really important that, if I had to pick between somebody who is an absolute go-getter, right, that didn't have the background, and someone who has a fantastic background but just lacks the motivation, I'll take the go-getter all day, every day, because I can teach somebody how to do math, right? One of the greatest success stories I've seen in my 25-year career is a lady who used to sell chocolates going door to door. She killed it. As a matter of fact, she's super successful, and in her top year did over $1 million in commissions as a mortgage originator. Now, I will tell you, I've also sat in the room with this individual, and her ability to do math wasn't exactly fantastic, but it wasn't what drove her success. And, what you need to understand is focus on your strengths, compensate for your weaknesses. Okay? So if you're a hustler and you've got a network and you're willing to talk to people, right? But your math and is not that great, then align yourself with a brokerage or an individual, or pair yourself with an individual who can help you compensate for that side of the equation, so that as a team, you'll be equally successful, right? Life isn't about knowing all the answers, right? It's about knowing where to find them, right? You don't have to know everything. It's hard to do. But if you can at least surround yourself with incredible people and a great support network, your probability of success goes up significantly.
Yeah, wow. Yeah, good point. Nobody's going to do business with you because you know how to do math. They're going to do business with you because they like you, they trust you.
Right.
Yeah, fantastic points. Kane, did you have?
Yeah, I fantastic points. Like Joe said, it really becomes about who you are, like the marketing piece of it, right, and getting out there. And you touched on this, I think, a little bit, but I'm curious to hear what do you think is going to be changing in the next few years, next several years, in terms of the role of the agent, especially with the emergence of technology?
That's a great question. And, everyone's kind of concerned about where's the market going to go. I'm going to tell you this. Lending is more art than it is science. Okay. You're not going to be able to write a computer that's going to be able to justify or put a deal together that can compete against an originator. As a matter of fact, some of this has been kind of tested socially through a couple of different social platforms where some of the best brokers have challenged sort of AI, where the brokers beat the AI. Because you have to understand that underwriting isn't just about mechanics, right? Yes, it does have a TDS and a GDS and an LTV calculation. And if I've got a complex portfolio with rentals, there's offsettings, there's DSC, there's all these different components. However, there's an intangible component that a computer just can't assess, right? Credit, credibility, track record, the X factor of the individual, right? Their credit worthiness. Although there is a beacon score associated with it, the beacon score doesn't tell you the story. A beacon score is a point-in-time assessment that is mathematical, and it's proprietary to either Equifax or TransUnion. However, it doesn't tell you the story. You need a professional. So what I believe going forward is that the future of this industry is about financial literacy. If you want to win, you got to be better. You have to have a solid foundation. You have to know your products. You have to know policies. You have to understand your customer and their financial life cycle. If you want to win, but you compete on price only, then you're going to lose to all these virtual brokers. However, if you come to the table and you build a business based on expertise and financial literacy and being a professional, I don't care who you bring against me, I will win. Because when you're racing on price, because that's what an online model is, you're racing to the bottom. In the absence of value, the last thing you have to negotiate is price. I've had plenty of people come to me, start their discussion on price, and the conversation ends somewhere else completely. Because when you talk to people, you've got to look at what they're hoping to achieve. We talk about individuals and their why. Customers have a why. Figure out what your customer's why is. I want the lowest rate. Why do you want the lowest rate? Because I want the lowest possible payment. Hold on a second. Lowest payment isn't necessarily the lowest rate. And are we talking, then when we talk about, what you're looking at, is this a principal residence or is this a rental? If this is a rental, did you know your accrued interest is tax deductible on an annual basis? So then really it becomes less of an issue because it becomes a write-off.
So let me jump in and ask you a question, because one of the things that we've done some surveys recently and found that trust is an issue between consumers and the brokerage industry, which is one of the reasons that we still have 30% market penetration overall, higher on first-time buyers. But why do you think, or how do you think that you can show the value that you're discussing? Because I completely agree. The brokerage industry has a huge value besides being able to get great rates. How do you find, or how do you think that you could promote that message to consumers who haven't used a broker before and do think that, the industry is about rates?
I think we as an industry have to change the narrative. I mean, if you take a look at our neighbors to the immediate south and their percentage of origination through broker channels, it's completely different, right? Canadian consumers love their banks, right? And really, it's an oligopoly. And I know I came from banks. I know how that works, right? I love banks. We all love banks. We have some amazing infrastructure. But the narrative in the industry has been, when the bank can't do it, go to a broker. But that's not true. The broker can do so much more than that. As a matter of fact, and this is where the average consumer doesn't know, the number one buyers of business in the broker space are banks. So why is it that we're letting consumers today think that they use us as a contingency fallback position, where the conversation should start with us, right? So I think as an industry, as individual brokers, we need to challenge that perspective. We need to redefine what Canadian consumers think of mortgage brokers. And, that's going to start, with all of us. It's going to be with membership associations like the CMBAs and the MPCs of the world. It's going to have to be with the education part, right? Whether they're coming in that process. So when we're educating them at the mortgage agent level, at the PMC level, at the broker level, we need to train them on changing and challenging the perspective and better defining themselves about what they do for people. And that, I think, changes everything. If I can put my finger on like an aha moment for me, I had a realtor that was that came to me, and this realtor had exhausted their ability to do institutional bank mortgages because they're over capacity. I mean, lenders have a capacity, right? Every lender is different, but they had fantastic rates. All their mortgages with tier one bankers, but it just got to a point where their mortgage specialist was like, I just can't do any more deals for you. Like we're over capacity. So you're going to have to look at some other options. So first thing this real estate agent says to me is, well, what's your best rate? Immediately I said, I'm going to be honest with you. If this was about rates, you wouldn't be calling me right now. You've exhausted your options with tier one institutions because you're over capacity. But what you're looking to do is grow your portfolio. Is that about right? He goes, yeah, but you know what? Rate's going to be a factor. I said, okay, fair enough. I said, you've amassed an incredible portfolio of real estate, and, it's absolutely commendable. It's beautiful. Having said that, what if I said this to you? What if I said to you that had you called me 5 years ago, this portfolio would have been bigger? What would you have said then? Now, as an established realtor with an incredible track record, can you tell me what the single most important contributing factor is to building a portfolio like this? And he went off telling me a plethora of reasons of why it was important. And nowhere in there was their mortgage rate. So he said, let me get this right. So what you're saying is that the key to building a portfolio in real estate is recognizing the value in the real estate. And I said, I've noticed that you tend to buy, but you don't just dump it. So you're not looking for a quick buy, sell. You buy and hold. Is that about right? He goes, that's right. Well, I'm going to say this to you. Had you called me 5 years ago, this portfolio would have been way bigger. You let the people you do business with limit the size of your portfolio. Now, I'm not just saying let's go out there and become insolvent and buy a ton of real estate. There's a balance between the acquisition of real estate and having a solvent fallback position. But I'm going to tell you this. I will help you buy more real estate, and we'll do that math together. And I'm going to guarantee you this, that your growth in your portfolio is more about the buying, the market appreciation, and the fact that someone else was making your mortgage payments, and less to do with the rate. Is that about right? By the time we were done, he refinanced 3 of his rentals from A lenders to B lenders and went out and bought more real estate.
Fantastic. So that's an amazing example of the value that someone like yourself can bring to individuals who don't realize that this industry can provide that kind of value. Yeah,
absolutely.
That's amazing. And that's the challenge is, of course, to get that message out to people like him who, have been doing this for several years and haven't picked up the phone and called you and found out that this is a better option for them. And that's something, I don't think our industry is large enough from like a disposable income type process to be able to invest in advertising to compete with banks with that messaging. So I think your point was well made early on that we have to have individuals go out there and be the champions of this type of message and do that. I imagine doing that on social media, in networking events, from the ground up is what this industry really needs to focus on doing. And, you're doing amazing work there. And as your role instructing individuals coming on with your passion, you're giving them that message as well, which I think is resonating in the industry. So it's a fantastic message.
I just have another question. So it seems to be a common misconception, I think, in the industry that you touched on earlier. Brokers are last, right? Go to the bank. If you turn down, come to the broker. Is there anything else that you think that is a misconception in the industry from those entering? So you have a new agent coming into your brokerage or coming into the industry. Is there common misconceptions about what the role is or what they should be expecting?
That's a good question. I mean, I think where they're coming from is a factor, right? If they're coming from the institutional space, they will have, sometimes they can have misconceptions about, what it means to transition to becoming a broker. Like, one thing I don't do is I don't mince words. I call it the way it is. Like, reality is you could work with an institution directly and you'll have one set of rules, and you go to the independent broker space and there could be a completely different set of rules. So, and that is something that you need to understand. Obviously, if I'm a bank and I've got a proprietary sales force, I have a financially vested interest to get to yes with that individual because they don't have another way of making money. So yeah, you know what? Are they likely to get an exception? Sure, maybe. But again, that's not what you should be building your business on. Like if you're just going to come into the broker space because you want to get the cheapest rates, can you get cheap rates? Yes. But you also have to understand that lending isn't cookie cutter. I will say, in the last decade, the rules and governance and change that has happened has changed how deals are priced and how deals are done. And I can tell you, there was no insurable, insured, and uninsurable 10, 15 years ago. Self-employed lending guidelines were super laxed. And I mean, obviously, there was a lot of lessons learned in 2008 and the collapse of the American economy with Ninja and Nina mortgages, right? No income, no job or assets, or no income and no assets, and things were getting done. Fortunately, the Canadian market had a lot more governance and checks and balances and controls where we didn't suffer, but we had to take lessons on what was happening. So, if you're a banker moving to the broker space, how you know your lender in, where you work today and how your lender operates in the broker space could be different. So you've got to divest yourself of what you used to be able to get done because it's not guaranteed to get done on this side either, right? So institutional people in their transition, they need to be mindful of that. Independent people that are coming from outside of the industry, it's very, 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 very important for you to understand that your hustle will make your phone ring. But you have two jobs now. In your transition, you will need to pound to build a network to get your phone ringing. But your part-time job is going to be understanding and building a foundation of financial literacy, right? As a consumer, you may know a little bit about mortgages and then you get a license and you learn a little bit more. But every day when you get home, you're going to be reading a policy or a manual or finding out about a feature with an institution. As a matter of fact, 2 weeks ago, the FSRA came out with mortgage suitability governance that's sort of coming into play. And mortgage suitability is not a new concept, for the record. So, mortgage suitability, however, is becoming increasingly important. As a matter of fact, and, listening to Antoinette Lung in her presentation, she talked about an audit they had done about mortgages and the suitability and trying to replicate the decision the originator or the agent had done and why they chose a product. And the question was, what percentage of those decisions do you think we were able to replicate? Or what percentage could we not replicate? And the answer was ridiculous. They said in 60% of the cases, the regulator was unable to choose the same product or understand the rationale as to why that broker chose that product. And the key, and whether if you're as a brand new agent, one of the things that we talk about in the training process is understanding the customer, validating the documentation and circumstances, but understanding that you have an equal responsibility. Your customers are two people. One, the end user consumer and the borrower, and the second is the lender. So you have an obligation to get across the finish line with your customer. We have an equal obligation to get across the finish line with your lender. And you need to be able to justify why you put that customer with that lender. So suitability is a factor. So if I'm brand new to the business, I'm making my phone ring, I can't do flavor of the month sales. Mm-hmm. I got to make sure that I am picking the right customer and pairing them with the right lender and the right product. And that has nothing to do with it could have to do, it may be a factor with my prepayment privilege. It may have to do with the rate. It may have to do with my payment interval. But if I've got somebody coming to me from the Department of National Defense who can get relocated nationally, then I probably shouldn't be going to a credit union that's restricted to only working in a particular province. Because chances are, today they're in Ontario, tomorrow they're in Nova Scotia. You know what? Next year they could be in BC. Then although that mortgage is portable inside the province, it's not portable nationally. The bigger picture, that KYC factor, and if you, coming into the business, don't put the time into understanding your products, your features, your lenders, and the restrictions, that suitability goes out the window. So, super important to understand the bigger picture in all of this. And it goes back to the point I made earlier. The future brokerage will be expertise and financial literacy. You better be good at what you do, because if you're not, you will compete against people who are.
Fantastic. That's fantastic advice. That's something we talk about, as you know, in the course, about having your file be able to speak to somebody on its own. If you're not there, if I've done a mortgage and I've retired or I'm away on vacation, and somebody looks at my file and the regulator looks at my file, can it explain the rationale itself without any human intervention, without me trying to come in and have to explain it? And that's something that I think you're so right about, that the industry is now doing a much better job, and as the regulators getting involved saying we need to do this better, the industry is falling in line and doing it better. There's still a way to go. But you've said a lot. You've given us so much to share. And for any of our viewers or listeners, take what Deren has said to heart. And I said your name that way because before Kane was asking about the spelling of your name, and give us just a little background about about your name and your background.
The origins. Yeah, for sure. I am a typical Canadian, an absolute melting pot of culture. My mother is Irish from Dublin. She immigrated here. She wasn't born here. She was born in Dublin. And my dad is a Turkish Cypriot. So I got the Turkish names. My first name actually is Mehmet, but Mehmet was just way too difficult for people. Fortunately, they gave me a middle name that was a little easier. It is Deren. You did say it right, but most people just look at it and go, it's just Deren with funny spelling. So I just make it easier for people. It's just Deren. But there are those out there that know me as Mehmet.
All right. Well, thank you so much for the time and the insight, a deep dive into what it's like to be a mortgage broker and what it takes to be successful.
It's extremely valuable information. Thank you so much. And where can our listeners find you online?
You know what? The best place to follow me, honestly, is on LinkedIn. I'm a bit older. I don't do the younger stuff. I should. I know it's wrong. Consumers are everywhere, but LinkedIn's the best place to sort of follow me. So I do get kind of in interviews with different sort of outlets, and if there's that opportunity, I'll typically fire it through my LinkedIn network. So LinkedIn's the best place to find me.
If you don't have a connection in LinkedIn with Deren, you really should, especially after you've heard what he's just had to say. You know, he's a phenomenal resource. His students are lucky to have him, and we were lucky to have you today for such a good amount of time. So thank you very much for all of your insights. We really appreciate it.
It's my pleasure, gents.
Thank you, Deren.
Thanks.
Thank you.
Thanks for tuning in to the $1 Billion Podcast. Make sure to subscribe to the show so you never miss an episode.
For more in-depth entrepreneurial insights, follow us on social media, and for more info on the show, go to BillionDollarPodcast.com.
See you next time.